Good morning. Thanks for joining us for this Environmental Upgrade Finance workshop. My name is Carolina. I'm a Sustainability Officer here at Wyndham City Council. I'd like to start by paying respect and acknowledging the Kulin Nation as the traditional custodians of the land on which Wyndham City sits. I'd also like to introduce some of the key contacts businesses can speak to when considering an environmental upgrade agreement. Firstly, Fiona Stevenson is the coordinator of Green Living here at Council and has worked with local businesses on their environmental upgrade agreements. To date, we've had 6 businesses install solar through environmental upgrade finance. Warwick Tullio is a senior project manager here at Wyndham and has many years' experience in the solar industry. Warwick has project managed the install of around 2 megawatts of solar across community centres, kinders, libraries and sporting pavilions here in Wyndham. He's also happy to have a chat to local businesses looking at installing solar and provide some free advice. Please feel free to send him an email. If you're not a business in Wyndham, I recommend you call your local council and speak to either the environment or sustainability team for some advice. And now I'll pass you over to Christine Gross. She's the channel partner and account manager at Sustainable Australia Fund, and she's going to tell you a little bit more about environmental upgrade agreements. Also, there's a sidebar, so please feel free to ask any questions along the way. Thanks so much.
Good morning, everyone. It's a pleasure to be here. Thank you, Wyndham, for inviting me to go ahead and speak today. So I'm going to be going ahead and discussing environmental upgrade agreements. I have 8 years of history working in this type of work. I come from the US at the largest residential EUA program out there, which is called PACE Finance. And then now I'm here in Australia the last couple of years doing commercial environmental upgrade agreements. So as you can tell, I'm very passionate about this finance opportunity that's available to you and the positive environmental benefits and also the cash savings that it can bring to your business. So let me just go ahead and share my screen. All right, so you should be able to see my screen now. Can everyone see my screen? Okay, great. So let's go ahead and get started. So basically, we're the leading provider for environmental finance here in Australia. So, and we're the only provider actually right now. So what we do is that we were first established in 2002 in the city of Melbourne. This type of finance has actually been around for a very long time. If you look at your rates bills, you can see that there's actually, you know, some line item charges on there, like it could be for fire department, for waste handling, so on and so forth. And those are community driven charges that are on there. So this type of finance can also, it's a community benefit, but now building owners can go ahead and elect to put this on. So the city of Melbourne took advantage of that and started this program back in 2002. So we had separated from the city of Melbourne in 2019 because we got too big. Melbourne said, you know what, we love you, but we can't provide the financing anymore. So because it's become too big of a program. So with capital that we received from Bank Australia, we've been able to go ahead and continue this program, and they're a huge supporter of us. So we are the lender, but Bank Australia is the one that's providing the capital. So with that ability and that capital behind us, not only just the $230 million, but there's definitely more on top of that after that first funding facility is filled up, is we can go ahead and spread out to other states. So we have about 80% of the population covered here in Victoria, so most of the major metropolitan areas, but also too, we're moving in New South Wales and South Australia too. We've got a few councils in each of those states, and those are going to be growing very aggressively here in this next year. So our finance covers 3 different product ranges. So we've broken it down to buckets or funding ranges. So the first fund that we have is the capital fund. So this is really ideal that if you have a business, a major structure that needs repositioning or remodeling, and you're looking for that bridge finance because the bank isn't going to be giving you all the money that you need, they'll probably take it up to 70% of the value of the property. We can come in and cover the remaining 30 30% of the value of the property and finance those projects in that building that you're upgrading that are of a positive environmental benefit. So it could be anything. It could be cool roofs, wall cladding, asbestos removal, waste management, water management as well too. Solar is the most common one, HVAC. The list is endless of what we are able to go ahead and do to upgrade that building. So if you have any questions, on any upgrades, definitely give me a call, or in the chat, you could also ask the questions as well too. The solar fund, pretty self-explanatory. I call it the golden child. So this is our most popular fund, and this is mainly just solar, photovoltaic, and battery solutions for businesses. And then you have your upgrade fund. So these are just more of the onesie-twosie upgrades that you're going to be doing with the building. It's not the capital fund where you have that major repositioning. What you have with the upgrade fund is, maybe you need to replace your ventilation system. It's an antiquated system. It's using a lot of energy, and you really need to go ahead and get that done and make it comfortable working environment for your employees, or cold stores. It could be rainwater catchment systems. The list is endless. Roof replacement. So you can go ahead and throw that in the upgrade fund as well too. So to give you kind of a little idea on how it works here is this is a fixed rate loan. All right, so we excel in the long terms, and you repay it through your council rates. So the longer the term, the lower the interest rate. So the benefit for you as a building owner is that you've got those payments, those repayments that are going to be less because you're not making those aggressive repayments, and you don't have that balloon payment like what is very typical of a chattel mortgage at the very end. Here, your first payment and your last payment are always going to be the same. And we can go up to 20 years depending on the products. Many products can go up to 20 years if you want it to go that long. Also, too, your loans, your minimum amount to finance is $15,000. So this makes it very accessible for the smaller businesses. And then our maximum loan amount is $20 million. So that also makes it accessible for the larger businesses. So you have a broad range of products that you can go ahead and do, and not just finance one item. If you want to go ahead and do multiple products, we can go ahead and do so, or facilitate the upgrades. So the finance is attached to the property. All right, so this is really powerful in itself as well too, because this has the power to novate to the new property owner if the property were to ever to sell, or if it was bequeathed to someone or passed on to a family member, without having to go ahead and settle any loans that are previously in place. So it's just like the rates bill. The rates, once a new owner comes in, that just automatically novates to that owner, and they continue making those payments. So this has the power to do that as well too. And if not, you just go ahead and negotiate it through the settlement process. You can, whatever you work out during that settlement, like other things that you negotiate through that process as well too. Another benefit is that the rates can't be recoverable with the outgoing. So this means that this is an outgoing charge. So you can go ahead and, you can go ahead and pass this on to a tenant or to an occupying entity if it's a related entity to the owner. So that way it's an outgoing charge, and you know what? There may also be some tax benefits behind that for you as well too, but you'll need to consult with your tax professional regarding that. And then, again, all projects, anything can be financed that's attached to the building and provides a positive environmental benefit. And that's the key thing right here, is we're looking to make a positive environmental change, whether if it's water, waste, or solar, renewable energy. So if you look at the rectangles, over to the right a little bit, you'll see it gives me more of a visual of what I've been explaining here. So your first one, your traditional finance, your lender is lending money to the building owner, and the building owner repays it through the lender. So your middle rectangle, this is where the local councils come in. So the lender is providing the money to the building owner to make the upgrade. The building owner is doing the repayments and sending them forward to council, and then council sends it back over to the lender. So to clarify this, it's not a government program. There's no government funds used whatsoever. The funds are provided by the Sustainable Australia Fund. But councils have been wonderful around the states, enabling this type of finance to be taking place so you can go ahead and upgrade your buildings. The councils, they're in for it because they're in it for the long game. They're trying to reach their sustainability goals, keep jobs in their community, and keep their community buildings modernized as well too. So they're in it for the long game there. And then you've got your third rectangle where even tenants can also get involved as well too. Environmental upgrade agreements where the owner would still have to apply because the owner owns that equipment from day one, and that equipment, whatever the upgrade is part of that building. However, in many cases, it's the tenant that's initiating the process because they're learning, because they want to go ahead and get that energy savings, or they need to do some type of upgrade that will help facilitate their business to be more successful. So it's a win situation for the building owner because they're getting a modernized building and tenant desirability to keep their tenants there longer, or getting new tenants. And then the tenant wins as well too, because they're getting the savings, or they're getting what they need out of it so that they can be successful in their business. And they certainly wouldn't want to move away from that building if it's exactly what they need. So it's a symbiotic relationship that's a win-win situation for the both of them. So right now, our council partners, Wyndham, again, is one of our council partners, one of the earliest on board, and we thank them very much for that. But we also have 36 councils in Victoria. We have, in New South Wales, we have 7 councils, and South Australia, we have 6. So we are very much in a very aggressive program right now to expand in those other states, but we're also going to be putting on more new councils this year in Victoria. So I wish I could tell you which ones, but it's still under wraps until it's official. But I'm very excited about the new ones that are going to be coming on board. So at this time, I just want to go ahead and open up for any questions before I continue on. Do we have any questions right now? All right.
We did have one, Christine. It was for Ian. For upgrade funds, is it a fixed rate or variable?
That's a really good question. It is a fixed rate. So it's a fixed rate. And so, and what's really unique about our finance product too is if you go to a bank right now, it's really difficult to get any loans right now, you know, in this day and age because of the COVID, that they were willing to go ahead and leverage the building above 70%. Also too, you know, your chattel mortgages, they're doing shorter terms as well too. So this finance, what works with us versus banks is the longer the term, the lesser the interest rate. So it's a really unique product, and it's a fixed rate loan. So your first payment and your last payment are always going to be the same, and there's no balloon payments whatsoever. Do we have any other questions? All right, we have a question here. There is a promo question from a solar company. Do you think it's okay to publish? Not understanding that question very well, so maybe if you can expand on that a little bit, I'll be happy to go ahead and assist you with that. All right, so I'm just going to go ahead and continue with the slideshow. So project eligibility. So project eligibility, like I've been saying before, and you hear me repeating it quite a bit because the reason I repeat myself is there's a misnomer that, you know, people think that this is just a solar program, and it's not. This program covers so many different upgrades that you can go ahead and do. So solar installation, water, cool roofs, very popular. A lot of people think that, oh, you know what, I want to get solar, but I don't want to get solar because I have to get my roof replaced. I have to get rid of the asbestos. And well, we can cover all of that in the financing as well too, and make it into a cool roof. So not only are you saving energy with your solar, but also your roof is performing as a cool roof, so you don't spend as much money on conditioning the space underneath it. Recycling and waste, lighting, and HVAC upgrades. So just the very important thing to remember is, so this is upgrade finance. It's not new building finance. So it must be attached to an existing building somehow. Okay, so the upgrade, we need to attach it to an existing building somehow. Now, the only difference on this is if you need to do a ground mount system, that's perfectly fine because it's still attached to the building because it's providing electricity to a structure. So a ground mount system, you can even do carports. If you're in a commercial area and you've got limited roof space, but you've got space to put up carports, we can use that as a ground mount system and put the solar panels on top of that. All right. All right, so I'm just going to go into the different types of clients that we have here and what are the benefits for each different type of client that we have. So our most common one is our owner-occupier. So where the owner is one entity, but then they have an occupying business as another entity, or maybe it's just all one and the same. So what's really beneficial for this type of customer is that you've got predictable, easy to manage repayments, and you pay it back through your council quarterly rates bill. So when you get your rates bill, you have your rates bill, and then you'll have another sheet of paper behind it in the same envelope that is for this charge as well. Also, too, you've got the longer terms, like I've said earlier, to ensure that you're cash flow positive. Makes it very easy to forecast your budget for each year. Also, too, you own the equipment from day one. So that's really valuable, especially today where we have that instant asset depreciation because of the COVID incentive. If that's something that you can go ahead and take advantage of, and of course, talk to your tax professional or see the ATO website for further information on that. Also, you have the ability to reportion the repayment with multiple tenants. So I'm working on a project right now in South Australia where you have a small strip mall and the owner is occupying one portion of that structure, and then there's two other stores that are also being occupied. And so what they're doing is that they're actually sharing the upgrade repayments amongst the three. So the owner has a certain percentage, and then the other two tenants have their percentage. So the building owner doesn't have to pay 100%. So it's all being worked out there. Also, no personal or business guarantees. Right now, our program is really, really popping. We thought, when we went into this COVID crisis, is that we thought, oh my goodness, where are we going to get business? And people are not going to want to invest. But the thing about it is that they do want to invest. They love the fact that, especially nowadays with this uncertainty, that we can go ahead and still do these building upgrades that have to be done and putting more money back into our pockets, putting more capital back into our pockets, but not having to put any personal or business guarantees. So it's the property that provides the security. It's not the business or people themselves. So, I only have one of the benefits. So sorry about that. I actually used this slide from my boss there. So the other benefits that we have is that we've got the landlord benefits. So landlord benefits, again, you own the equipment from day one. And then also with the landlord, here's a really great opportunity to go ahead and upgrade the building that you have right now and really make sure that you've got that desirability for your tenants, that your tenants will either want to stay longer or that you've got tenants that are wanting to move in because you've got a building that is modernized. So, and then you've got your tenant desirability too. The tenant is the third customer, and here is where the tenant really wants to get these upgrades done to be successful in their business, and with the help of the landlord, because it's always the landlord that would need to apply because it's their building, but the tenant can go ahead and make the repayments for the landlord, and the tenant is reaping the benefits because they've got that cash flow coming into their business, making them more successful, or facilitating the building to make their business more successful operationally. So we've launched just a little bit of an incentive right now with the COVID-19 that's going on right now. So right now, if you go ahead and apply for the financing, and if you want to take advantage of a 6-month repayment holiday, you can certainly apply to go ahead and see if you qualify for that. So what that means for you is that from the time that the financing takes place and the project is paid, you are not going to have a repayment for 2 council quarters. So that's a huge incentive for you because that gives you some breathing room to go ahead and get the upgrade done, get some energy savings back, put some cash back into your business, and help you out with that. Also, too, like I said before, the repayment terms can go up to 20 years. So you can go ahead and decide what your repayment terms are going to be. What I typically like to do is When I get a client that contacts me, if they're not going through their installer, they contact me first to go ahead and find out what the next steps are. If they know already what it is that they want and approximate savings that they have, I can go ahead and create quotes for you so that you can be cash flow positive from day one. And so I'd love to go ahead and have the opportunity to speak with you about that. Also, too, what's going on in this is that you can go ahead and finance the GST. All soft costs can be financed through this program. So, and GST also can be financed. So if you finance the GST, you can go ahead and claim it back on through your BAS, and that's more money that you're putting back into your pocket also that first year. And then you've also got the ATO accelerated depreciation that I mentioned earlier. There's been a very big rush lately with us to go ahead and have these applications processed as quickly as possible because people want to go ahead and get this equipment that they're putting on their building done as quickly as possible as well too. So we're seeing all kinds of unique products that are coming in, and will be coming in here for about the next 5 months. So this kind of gives you a little bit of an example of the incentive that we have going on right now. So what we call is cash is king is what we call this incentive. So first off, we've taken a system here, 99 kilowatt system here in the Melbourne metro area. And with the GST, let's say you financed $165,000. And your estimated first year savings on that system is $27,000. So if you look at the 20-year term, the column to the far left, you're going to see that your first year energy savings, boom, you're putting it right back into your pocket, $27,000. That's $27,000 you don't have to let go and pay someone else. So you get to keep that. Then you also get to get the BAS refund with your GST of $15,000. So you're putting that money back into your pocket as well too. And because we're having the first year repayments, if you qualify for that 6-month repayment holiday, then you only have $7,467 of outgoing for the repayment for the environmental upgrade agreement. So your net cash flow position for that first year is $34,533. That's huge. That is a huge savings for you that you're putting back into your pocket for this next 12-month period. And so that's for a 20-year term. And then we've also provided examples for the 15-year term, and that's really a big term for us. 10 and 15-year terms are actually our biggest terms, or most popular terms. You can see at the 15-year term, it's $33,018, and then at the 10-year term, it's $25,290. So, you know, even if you did nothing, even if we didn't have anything today, and you just had your system savings, you're still putting $27,000 back into your pocket. All right, so the solar, and the reason I brought up the solar example is because it is our most popular product here. So that is huge. And then also, like I said earlier, the instant depreciation for the products, we didn't even put those savings on here because, again, you'll need to speak to your tax consultant or visit the ATO website to see if that's also an additional benefit that you can get on top of that as well too here this year. So if you have any questions, feel free to ask those questions from me. So we have a couple of case studies.
Yes.
Sure.
Do you need to have minimum equity in the building?
I beg your pardon?
Do you need to have minimum equity in the building?
So good question. So we do have to have some equity into the building. So we cannot over leverage the building. So for example, if your building is worth $1 million, it has $1 million value, and you've got an $800,000 mortgage, that means you've got $200,000 worth of equity that you can go ahead and borrow with our program. That's a really good question.
And the other one was, how does a solar company qualify to offer this to their customers?
So excellent. So the solar company, they can go ahead and offer it now. They just have to be licensed to go ahead and do the work. And then I'm the channel partner manager here with the program as well too. So what I do is I outreach to solar installers out there, and you just go ahead and contact me afterwards. What we do is that we have trainings. I hold trainings every Wednesday with solar companies with their sales staff, so they can go ahead and introduce this financing to their customers so that they have a little bit of knowledge. And during that training, I explain everything on the program, how it works, how to use the quoting tool, and then also the type of support that we provide not only to the customer but to the solar company as well too. We take a very well-rounded approach here, like a turnkey approach with the Sustainable Australia Fund. Unlike other lenders where they're very hands-off with the installers and just very cold with the customers, we like to be part of that process so that, you know, our customers, you know, the person doing the upgrade of their building, feeling that they're going to be getting that support not only from us as the financier but also from the installers as well too. So please contact me. I'm happy to share that knowledge so you can go out there and share it, and we can help the community do their upgrades. Any other questions?
That's it for now. Thanks.
Okay. So I just have a couple of, I've got a couple of case studies here of some projects that we've done. This one's a really popular one. It's a water treatment plant. So what this project was is that they were taking this water that was being used to go ahead and clean the facilities, and they had to sit there and truck it 150 kilometers away to a water treatment plant. And then those trucks had to come back, fill up with water again, and take and keep doing that. And this was done 7 days a week at night. And it was a tremendous amount of fuel that was being used and CO2 that was being pumped into the air because of this transportation issue that they had. So what we've been able to do is we went ahead and we funded a worm farm to go ahead and just pipe the wastewater into the worm farm. And then the worms, happy little millions and millions of worms, are sitting there eating all of this water up, all the goodies in the water, and they're purifying the water to a certain point that it gets it to a level where then they were able to go ahead and just provide that water locally to the local farmers in the area. So now they're not having to truck 150 kilometers away. They're just a couple of kilometers away, and it just made it into a very good community project there, but it was for booth transport. So the worms, by the way, are doing very well, very fat and happy and fed. Then another case study that we have here is Hussey. Hussey is a lettuce farm, 74 acres. So typically what happens with businesses too is if they're really getting into environmental upgrades for the first time, it's not unusual for them to sit there and start with one project. And so that's exactly what they did here. They started with a 99 kilowatt project. They said, you know what, we're not completely sold yet. We want to make sure that this is going to be working for us. So they started with a 99 kilowatt project. And then, you know, about a year later, they came back to us and they said, oh my God, we love the solar so much. It's working so much. We're saving so much. We want more solar. So that's exactly what they did. They went out there and we did second projects. So a lot of our deals actually that are coming in are repeat customers as well too, upgrading with second projects because now they want to go ahead and do upgrades to other parts of their building or get more solar. So the outcome for Hussey is they're now saving $86,000 in their electrical that they were just pretty much giving to the utility before. And now they're also, you know, they've got 754 tons of carbon that are being mitigated or taken out of the air. So that's a huge win situation for Hussey there. So to recap the benefits of an environmental upgrade agreement, all right, no personal or business guarantees, all right. Also, the environmental upgrade finance is attached with the property and can stay and novate to the new property owner if all parties are in agreement. All right. Also, we can finance 100% hard or soft costs for you with the associated works. We've got a project right now. They're having to upgrade the electrical in the building to go ahead and accommodate the solar system. So we're doing both projects so that way it could be environmentally friendly. The property owner owns the installation from day one. So that's your equipment from day one. So we don't own the equipment at all. The tenant can go ahead, can pay up to 100% of the repayments. Or what you can even do is you can even do shared costs. You know, you can sit there and have the tenant maybe pay for one part of the upgrade and you can pay for another part of the upgrade. For example, we have one tenant that needed the upgrade, but the roof was in such bad shape, it really needed to be replaced. Whether the solar was going to be put on there or not, the roof had to have been replaced. So they were able to go ahead and work out a deal where the landlord paid for the replacement of the roof, which was a benefit for him because he was able to upgrade his building. It had to be done, whether you do it today or tomorrow, it had to be done. And then not only that, but by making his tenant happy, the tenant stayed longer, and the tenant is paying for the solar, which the landlord owns anyways, but the tenant's making the repayments for the solar. So it's a win-win situation for both parties. So also, no consent is required for existing mortgage, so you don't need consent from your bank for the existing mortgage. The environmental upgrade agreement does not appear on title, all right? And then it also doesn't appear on credit either. So we do run a credit report, which is standard, but it's just an inquiry and that drops off, but it doesn't get reported to the credit bureau. So what that does is that frees up your borrowing power for other things that you may need for your business. So that's about it. That's the end of my presentation. I'm happy to go ahead and answer any questions that you have. If you wish to speak to me outside of this, please feel free to give me a call. My phone number is there on screen. And actually, you know what? I need to update that phone number. So I need to update the phone number. My phone number is 0466 900 491. Sorry about that. We actually moved locations last week, and I didn't catch it when I went through the slide deck yesterday that had the old location phone number. So we're working from home now permanently, so that's a pretty good thing. So making me more sustainable, not having to drive my car into work. Any questions?
Christine, I can send an email to everyone with those details as well afterwards.
Okay, great. Thank you so much. I didn't catch that.
Also, we do have one question. I've read on the website that this is now being offered to residential buildings in addition to commercial buildings. Is this true?
So it is. The legislation has passed for residential. There are a few councils. I know that Darabin has got a residential program going on. So what's going on with that is we are right now in development of doing residential, and that's one of the reasons why I'm here as well too. And we're actually having a big meeting about it with our company to go ahead and set it up. But residential is not going to have the same setup as commercial, and it's going to take us about anywhere from 6 to 12 months to roll that program out. We want to make sure that it's rolled out properly. Good question. Any other questions? So one of the questions that I get quite a bit, I do get calls in quite a bit, is people wonder, well, how do I get started? How do I start getting the ball rolling with this? And so the best way to do this is getting in touch with your installers. Is you know, if you've got a project in mind that you want to go ahead and do, is getting in touch with an installer that's out there, doing a web search and then making contact with them. Ultimately, what we do is that we leave it up to the customer to go ahead and decide who they want to use as an installer. And so we do have a lot of installers that have worked with this program that have had no experience, and we've been more than happy to go ahead and hold their hand during this process. And they've actually come back and have used it again for other clients once they've gone through the process once. Now, and I know we have one installer that's on this program, on this webinar as well too. So you can contact me, and I can get you, you know, the information that you need and the training that you need, so you can go ahead and do that. It's only an hour webinar that I do for that. So that's really the first step, is just going out there and just getting those, you know, that done. Now, if you do need any assistance in that, you know, please feel free to give me a call. I'll be more than happy to go ahead and give you that guidance as well too. But that's the first step. And then once you have a project, the cost of the project, then if your installer didn't provide you the Sustainable Australia Fund quotes, you can contact me directly. Just send me that proposal, and I'll be happy to run the quotes for you as well too, and go through the next steps. And then once you decide on what financing you're interested in, what term that you're interested in, then the application itself, you fill out the application, we start that process for you. So any projects under $50,000 that are cash flow positive with a savings to investment ratio of 1.1 or greater, in most cases, we're not going to be asking for any financials. We're just looking for a credit score that's a passing credit score. Any projects over $50,000, we will need to go ahead and get financials on that. But we give you guidance throughout that whole process. Any other questions?
Christine, I had a question. Do you have any examples of any EUFs that small to medium businesses have done around waste, or in particular maybe organic waste or food waste?
I don't have organic or food waste. I have water waste, but not organic or food. No, not yet. We are actually, there is one project that we're hoping will go through, and that's, but we're probably 6 months out before doing a case study on that, where they're actually getting a biodiesel generator. And so it's a company that has several different types of companies, and one of the things that they have is restaurants, and they have the grease pits at the restaurants. And what they're doing is they're actually creating their own biodiesel from that oil waste there to go ahead and feed the diesel generator. So it's a very unique project that's happening there, but we're probably about 6 months out for a case study on that one. But that's a good question, yeah. So, any other questions? So, all right. So, I mean, that's about it. I'm really excited about this. I hope I get to hear from some of you. You know, it's really up and coming. And the thing about it is, with this crisis right now, you know, this is a really good program coming from the States. I saw what it was able to do during the recession. When we started the program in the States, we call it the Great Recession in the States. People thought we were crazy. People thought, why are you doing this? We're in the middle of a recession. And well, because these upgrades have to be done no matter what. You know, the buildings, you can't ignore if a building needs to be fixed or something like that. And what this did, it opened up opportunities and freed up, you know, that credit report and no personal guarantees to go ahead and get these upgrades done, you know, to the buildings over there. And so it was great for the interim. So I hope this is the type of financing that you'll go ahead and like. And again, like I said before, if you have any questions or want to go into more detail for your specific scenario, I'm more than happy to take calls from you. Okay.
Excellent. Thank you so much, Christine. We really appreciate your time and giving us more information about environmental upgrade finance. I'll share everyone's contact details in an email with the presentation and the slideshows as well, so that you should receive an email in the next couple of days.
Okay. Okay, great.
Excellent.
Christine, we do have 2 more questions.
Sure.
We've got some time. One is, when you talk about credit score, is that the credit score of the business owner individual or the company credit score, so the people who own the building?
It's whomever the owner is on title. So if the building is owned by a company, then that's the credit score that we're going after, is the credit score of the owner on title. Now, if it's it's a really good question. If it's an owner-occupier situation, because sometimes, you know, maybe the building owner is a trust and there's a trustee involved, and maybe they don't have the credit score because there's not really too much transactional history there, then we can also go for the occupier credit score as well too, to get that to qualify, if it's a related entity.
Great. And just the last one, how long is the average turnaround for finance approval?
You know what, we can actually turn it around within about 2 weeks, about 2 to 3 weeks to get it from the time that the application to the signing of the documents. What's really critical is when clients are applying is that if we do need financials and such, we do need that information as soon as possible, so we can go ahead and get that done for you. But it can happen quickly if we are provided that information quickly. It takes us once we have all the financials with us, it takes us 5 business days to come up with a conditional approval, and then we go ahead and schedule with counsel.
Fantastic, thank you.
No, you're very welcome. Good questions. Any others? Okay. All right. Well, guys, thank you very much for attending this webinar. I hope you guys have a fantastic day.
Excellent. Thanks so much, Christine.
Thank you. Bye.
Bye-bye.